Hello, it's Richard Bowser here from Property Investor News magazine, and just thought I'd say a few words as the Christmas holiday season approaching. We just published our December Property Investor News magazine, and as usual, it's packed with quality information, evidence-led, data-led articles to help you on your property investing journey. So let's just summarise what we produced in this December magazine, which for many people, I think if we overlook the UK property market, it's been a sort of game of 3/3, to bring in a football analogy, rather than two halves. And of course, the final third for the UK property market in particular, residential I'm talking about mainly, has been clearly impacted by that disastrous mini budget from Liz Truss and Kwasi Kwarteng, which obviously has led to a complete reset in terms of lending rates, particularly for fixed rate mortgages. And many of you who are landlords and developers will be on fixed rate deals. I'll touch on that in a minute, but let's just sort of recap on what we just published in the December magazine. Our lead article looking at the opportunities ahead for 2023, and also a look at the REITs, the real estate investment trusts market, and what's been happening there, which in my opinion and the opinion of some seasoned observers is now a potential buying opportunity, without question, because values have slumped probably by about 20-25% or more in some cases. So I think it's definitely a sector that you should be looking at as a property investor. We also obviously have been looking at a number of topics in this issue to reflect what's been going on and what's likely to happen. One on the positive side, in terms of the content, we looked at the outcome of the Property Investor of the Year Awards, and I did an interview with Maxwell Scott, and he won the Property Investor of the Year Award recently at Grosvenor Square. Congratulations once again to Max. So you can read his story in the December magazine, as well as another look at the awards themselves and some of the other awards that were given out in late November. And you'll be reading more about a couple of the other award winners in upcoming editions of Property Investor News. Now, alongside those articles that I've mentioned, we had planning opportunities, article from David Kemp, a regular contributor on planning, and also from Richie Clapson looking at property development. And Piot and Jay once again looked at the property auctions market and gave us some insight into what's going on there. I mentioned a few case studies in that article. And then we had Kevin Wright contributing a piece on how to utilise bridging finance, which is many seasoned, experienced investors use bridging finance very cleverly to accelerate their portfolio growth. Now, as I've said already, let's touch on the market before I finish off. Clearly, you know, we have had a difficult year, particularly towards the end of the year, and there's a lot of uncertainty about, particularly affecting buyer confidence. So, in my opinion, we're now into a different market altogether from what we've had over the last 3 years. £450 billion of support by government, by Rishi Sunak when he was Chancellor, to ensure that the economy, the UK economy, didn't go over a cliff. And of course, that liquidity flooded into the economy, boosted many businesses and individuals' bank accounts, and a lot of that fed through into the property market and has boosted valuations. So the positive news, of course, is in the last 2 or 3 years, we've seen your typical residential value in many locations, barring inner London, which has been the underperformer. Many locations have seen value growth up by 20-25%. So that's obviously been a positive. So, you know, that's the backdrop. But of course, now we've got these rises in bank rate. Bank rate now, Bank of England up to 3.5%, and it's likely to go up a little bit more before it reaches its peak, which many seasoned observers think is going to be either sort of towards May, June of next year when bank rate will peak. That's affected by confidence, understandably. So auction results of late have been pretty poor. A lot of the auctioneers that are typically got used to selling 80-90% of their book on the day in the room. Most of it these days, of course, is done online rather than in the room. But auctioneers now are seeing sold rates, even with some of the sort of questionable way that the data is put together, sold rates in the room are 50%, which indicates obviously that there's not a lot of confidence out there from people buying at auction, or that the people who, and the auctioneers themselves that are taking on these lots to sell, have got their pricing wrong and people are just not prepared to pay. So in my opinion, just as I come towards the end of this, I think next year is going to be a real period of opportunity, certainly the first half of the year. And in fact, at the moment, I think without question, there are some opportunities now about to buy at prices which in 2, 3, 4 years' time will be seen as absolute steal. And I think that's likely to be the case. The one thing that I would encourage people to do is to look at some of our previous articles in Property Investor News about creative acquisition strategies, doing delayed completions, using option deals. Those can be very, very effective in this type of market. I mean, we've got case studies going back 10, 11, 12 years with people like Tor Portis, some amazing deals that were done, which proved very, very profitable. And I would encourage those of you who are subscribers to Property Investor News to research the back catalogue and read some of those articles. So clearly we've got 100,000 people a month coming off fixed rate deals now going forwards, and that's again going to present potential opportunity. This is just the nature of the market. Some people unfortunately get over leveraged, and all their lenders are no longer so sympathetic, and they may well be approachable for a deal which 6-12 months ago they wouldn't have even considered. In my opinion, we're probably going to see bank rate peak at no more than 4%, and that will mean lending rates are going to be somewhere around where they were pre-2008. We've just got used to this incredible era of incredibly low interest rates in the last decade, and it was never going to continue, and it won't. Rates may well come down, I think, perhaps in a year or two, back down towards maybe bank rate down towards maybe 3%, even 2.5% perhaps, but lending rates are going to be in that 4 or 5% rates, and that's what you've got to do your arithmetic, in my opinion, going forward. So yeah, I mean, the great news, of course, is that on the rental market, rents have been rocketing, for the last few years as we've come out of the COVID era. Without question, that whole phase of getting away from the cities, people getting away from the cities, wanting more space, has ended. The latest data that's been put out by Zoopla will show that strongly. Cities are back in favour, and I'm going to be doing another video over the holiday period to update you on, in my opinion, some of the locations that you need to be thinking about, and this will be data-led comment from me. So hope you can tune in again over the next week or two to that. So as I've said already, creative acquisition strategy is definitely something you should be thinking about, and in my opinion, the next 12 months and the next 6 months offers a real period of opportunity. So the key thing, of course, is, are you prepared? Are you ready for this buying opportunity? Or are you, like too many people out at the moment, confused by all the negative headlines in the national media that tend to swing from over-optimism to absolute scaremongering, doom-mongering? We in Property Investor News have always tried to take a more rational, considered approach to this marketplace, and not to over-speculate on strategies that are not time-proven, but to encourage you to look at stuff which will work and has been proven to work over the decades, and that remains the case. So that's it for now. Hope you've found some little nuggets there in this commentary. Subscribe to Property Investor News, of course, if either your subscription has lapsed or you're looking to keep and be an informed investor. If you're watching this on our website, well, obviously you can just hit the subscribe button. If not, go to www.property-investor-news.com, and I look forward to catching up with you at a future point. Thank you.